All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news, special evening episode for February 3rd, 2025. We are recording this at 7 p.m. Eastern Time, and this is episode number 464. Today we have a special option professor market outlook episode titled Top Stocks in 2025 and Best Option Strategies. So I'm going to go ahead and turn it over to the option professor.
Okay, thanks, David, and thanks everybody for being here. Very exciting day today. A lot of action. Trump's on, Trump's off. Tariffs on, tariffs off. So a lot of volatility. The VIX had hardly broken 20, so that kind of gave us an indication that it was probably going to be a temporary, little bit of a charade with the tariffs. Because if they were actually going to be on for a while, the market would have been down a lot more than that. Okay, but what I'm going to do here tonight, first of all, let me introduce myself. I'm Jim, the option professor. I've been doing options and in the education business on options for decades. Been to the Options Institute in Chicago for training. And like I say, I've traded thousands and thousands of options contracts. So I'm very knowledgeable in the area. What I'm going to do tonight is I'm going to go over some of the top stocks already in 2025 in both the NASDAQ, the S&P, and the Russell. Some of them you might have heard of, some of them not. Then I'm going to go over some of the stocks that have earnings coming out this week, see if there's any setups like Palantir, where obviously Palantir came out with earnings and the stock went up 20 bucks in the aftermarket. There is almost a 4% short interest on Palantir. So some of that might have been people scrambling to get out of their shorts. We'll have to see. At any rate, it's certainly a highly valued stock. With regards to what I'm going to end up with is how I help people with my charts, my alerts every Sunday night, an options class so you get smart in options, and coaching where I can explain how I trade the options and maybe help you trade yours better. So, a lot to cover. Let's get on to it. I'm going to start out with the top stocks, and I'm going to start out with the ones in the Russell. Again, these are going to be risky guys because a lot of them are like penny stocks. But you know what? A chart is a chart. And, I'm going to give you some of these. Now, this is as of Friday. The returns year to date was as of Friday. So basically, the first one is FUBO, FUBO. Now, again, I'm going to be sharing information and ideas and opinions with you. I am not giving out any advice. That's not my job. That's where you go to your broker, find out what's suitable, and then you guys work out what you might want to do, what's right for you. I'm trying to just provide you with some information. Let's look at FUBO. As of Friday, it was up over 200% for the year. That's not a bad deal. And let's see why. Now, again, look at the chart formation, and you can see it was already set up to take off before it did. See how it's all like here? And then once it gets above the gold line, it's just like buy. And once the red line turned up in the green, you already got the indication. Now it's come back down. So actually, the green line here would be something you'd want it to stay above. And then, of course, the red line as well. So this is a neighborhood in this little district here, 354. That if it can hold, it could make another run up. So you keep an eye on that because your RSI is strong. But clearly a volatile stock this year for sure. Next one was Noodles, NDLS. As another big mover for this year. As of Friday, was up over 150%. Again, it's a cheapie as well. So these, low-cost stocks obviously are very risky. But if you're on the right side of them, they could be good for you. But again, you see how it's turning down here, giving you it's going to move, it's going to move. So there was a good reason to get into this thing down here. Now, there's a good reason why it might have trouble up by the gold line. So the gold line, is coming in at about $1.50, and it's trading $1.64. So if you can stay above that, you don't know where it's going. Certainly, like I say, a reversion to the mean's not off the table. So you got to be careful with some of these things. Okay, next one up is Loop. L-O, no, not Loop. I'm sorry. Innovate, V-A-T-E. These are on the Russell. These are small caps. A lot of them are losing money, but, they are part of an index that people think might have a good time of it looking forward. A lot of people positive on the Russell. This one here, again, You had the turn here. You had to get it hold the purples. Yeah, nice holding purple. That's a good deal. Got above green, got above red, got above gold, and bam. Now, could it pull back to these lines here? Yeah. And if it pulled back to here and here, that would be more interesting as far as an entry is concerned. And it does look like it might have an up flag down pole coming. So keep an eye on Innovate. Another one that had a big move so far this year is Accolade, and it's ACCD. So what do we have for Accolade? ACCD. There it is. So these are some of the bigger ones in the Russell Index, always known as a speculative index because it's small caps. And again, I think it was 40% of the companies aren't making any money, but they also are growth prospects. Now here you go. This one's in a big range, got above here, and boom, it's flatlined. So hard to say what's going on here. But again, as long as it would stay above green and gold there, you could be somewhat thinking it could be constructive. But again, this isn't my cup of tea. I'm just telling you what they are because they're in the Russell 2000. Let's turn towards something more familiar like the S&P 500. And I'd like to look at the names that are a little bit more moderately priced. Some of these stocks, $300 a share and $600 a share, that might be out of the appetite of many people. So let's look at some that aren't as much. And the first one would be CVS, something I put on my report. So anybody who gets my report have seen CVS before. And I guess CVS is doing a pretty good job of it here. Healthcare is supposed to be one of the sectors that are not supposed to be as affected by tariffs and all that kind of nonsense. And so banks, real estate, healthcare, that kind of stuff might be less affected. But as you can see, when we were talking about it down here, it was a good deal, came back up. It's up here in purple, so it's had a big run. But again, it's got some resistance right here, and it's got some resistance right there. On a 20-year graph, just to get an idea of the big picture, it's in a big downtrend. So all you're really getting is like a reversion to the mean thing. So I'd be careful on that one. What else doesn't cost $9 zillion? How about Vista Energy? That probably got hit because of the energy market might get volatile, but also these guys are pretty heavy into the data center energy stuff, and that got kind of hit. Let's see how it's doing now. It was up 100, it was up 21% as of Friday, but I think it gave some back. Yeah. It's been a nice trend though. That's a nice looking trend. And then here, it's right on purple. So if it's going to hold up, that's the neighborhood. So if you're going to sniff around at this one, I say this is the neighborhood because if it breaks here, the trap door takes you all the way down there. Keep an eye on VST. Okay, Starbucks. That was on the sheets as well that I sent out. And that guy is doing some good stuff. So people are starting to reward him. One thing he's doing is he's not making their bathroom for public use to anybody who comes in. So eliminated a lot of riffraff, which people like when they go to get a cup of coffee. They don't really want a lot of nonsense. So this thing came down, couldn't even fill the gap, went about halfway into the gap, came right back above red and purple. So you had nothing but a good deal going on here. And then basically it just, ever since it got above 98 and had earnings, it's been a good deal on the upside. Now, where could it go? Where could it go is, like I say, you got all the supports right there. So what does that mean? That means it has opportunity to keep going and going and going. So as long as you stay above these lines here, I'd stay positive on Starbucks. And it has room to move. Next one up in the affordable category, not the Meta Platform $700 a share category. Why don't we look at Davita, DVA? Now, these haven't been up as dramatic as those Russell ones. These things have been up stuff like 17%, 18%, 20%, that kind of stuff. These are bigger companies, All right, so let's look at Davita. Davita Partners, what are you doing to us here? Let's bring it into the 1 year and see what's going on. Yeah, it's already had a big move, so not my cup of tea once it already has moved. But can you see in here? I would have been very interested as it's turning. Yes, once it got above blue line, take a shot, then go underneath. Okay, all right. What else do we have here? Let's see. So Davita's already made its move. What about 3M? 3M. That was another one. Down today. Yeah, it already had its big move. Yeah. Now, what about on a long-term basis, though? So it got a lot of upside like Starbucks might? It still has some room, but not an ideal place to get involved, in my view. Again, these are all my opinions. Let's see what else I got for you here. Anybody want any Texas land for 1,300 bucks? Or KLA for almost 800? How about some builder's source for 160? That's somewhat reasonable. BLDR. See, the problem with a very expensive stock is the options are going to be very expensive too. And if you're wrong on an expensive option, it costs a lot of money. Okay, so builder source. Got to figure something's going on with these people with all that LA fires, maybe. I don't know. Let's see. Down today, though. Yeah, well, they're going to be in lumber in Canada. Now, tomorrow might be a different day, obviously, because they called off the dogs on Canada. So let's take a look. It seems like that green line area. What do we make that out at? 140? Yeah, that 140 neighborhood's kind of support. What does it look like on the 1 year? Yeah, it's going to have problems until it gets above 175. Sloppy looking, really. But above 175, there's nothing holding it back. So I'd keep an eye on that number for sure. What else we got here? CrowdStrike for 400 bucks. Now this is one that everybody loves. HWM. Let's see why I love them so much. What's the chart look like? But people really believe in the future of this company. Steady Eddie all the way up. Steady Eddie. How about on a long-term basis? Is it all at all-time highs? Yeah. Obviously, this has been a very good stock. That's why it's so popular. Unfortunately, that's why you got to be careful when things are popular. That means everybody's already in, maybe. All right. Well, that gives you some right there off that. Let's go over to the NASDAQ. And then I'd like to get into the ones that have earnings this week. So maybe there's a setup we could take advantage of, really, huh? So here you go with the NASDAQ. In the NASDAQ arm, that's pretty somewhat reasonably priced. Let's see if something's going on there. And that could explode if it gets the numbers. That has earnings out this week, I believe. I will tell you when it does. It has it on Wednesday. So let's check it out, see if there's something going on here. Well, it's not too bad. It's not ideal. Ideal would be down by the gold and the blue and the green. But, this could be something that could take off if it gets the good news. RSI is kind of floating around. Might even be a reasonable strangle idea if the premiums aren't too bad. But again, there is upward momentum to it. Let's look at the 5 year. I don't think it's been around that long. No, it's got pretty steady. So where's your number? Right here. Well, that's called the meeting of the minds. So the meeting of the minds are all coming in around 140 bucks. As long as 150 bucks doesn't get underneath 140 bucks, you might have something on the upside if they announce good number. Now I can see up there the market's already up $4. So yeah, this would be one that as long as it can stay above those 140, 145 area, you could get a surprise and you could get a pop. It's an interesting one to take a look at for sure. And may take a gamble on if you really think it's going to happen. All right, let's see what else we got here. Well, here's a Chinese one that was going to do good. PDD. And it got hit a little bit today with the tariffs. But these guys in BABA are two of the more popular ones for people to get into if they want to do a little bit of China. Yeah, it got hit pretty good today. What does that mean, though? It means it's right down here near the support area. It didn't take out gold. Where's the real gold level at? 98, $100. We're at 105, not too far away. So if you can hold 98 bucks, that's a very good sign. And it is up a little bit in the aftermarket, but not much. And here you go. A lot of resistance right there. So that's your problem. It's stuck in the pickle. If this was a baseball, this would be a pickle, and he's running between the two basemen there. So you really need to get above purple and gold to get going. On a 5-year basis, how's it look? Yeah, again, there's still resistance on the China stocks. So you got to be careful with them. They could pop, but like I say, they got resistance above, no doubt. I'm trying to find something that is. Well, here's one that is starting to pick up steam, and it's in healthcare, and that might not be a bad sector. GEHC. In fact, I put this on my report about 2 weeks ago, 3 weeks ago, I think. And so let's see how it looks. I mean, certainly GE has got their act together. That was a gone and lost, forgotten. I used to buy high yield bonds on them simply because everyone thought they'd default. But here they go. This stuff here has gone from in the 70s up into here. And on a long-term basis, got everything underneath the market. You can't mind that. And on a 1-year basis, yeah, you got everything underneath the market and rising. So, it's something to keep an eye on. If you like healthcare, I don't think you could do worse. You know what I mean? So, and it's off to a good start this year. Maybe there's a reason for that. What else do we have here? Okay. Trying to find something reasonably priced that might have a future. Okay, we got one here, Qualcomm, and they got earnings this week. Let's see what's going on here. All right, well, that's not the worst thing that ever happened here. You got these lines coming up. It's above purple. That's good. It's having trouble with gold. So what would I say about this thing here? I would say if this thing can start busting above the 170 mark, is that about it? 175, 175. There's a whole lot of white air up there. So if they can come out with something decent and break above 175, this thing could have legs. It's at 171 in the aftermarket, up a little bit. They got earnings coming out on. Qualcomm has earnings coming out on Wednesday, along with ARM. So keep an eye on that one because, like I say, they get good earnings and people get it above 175. Anybody who's short's not going to want to be there anymore. And if they get the kind of earnings that get people excited, and you get a deal where everyone's buying and covering shorts, and the market makers are the only guys selling, they can raise the offer on that one if they get the good numbers. Here's one here that lost its steam, but maybe it's just going to go right back up again. MicroStrategy. Now, these guys, are what I call the forerunner of speculating on Bitcoin because they borrow money, and now they're doing preferred stock. They were just doing zero coupon bonds. They borrow the money and they buy all the Bitcoin they can. Now, I love this thing, and it was on my list at 140 and 180 because look at this. That's when you got to get in. Here it blows up. It's going to revert to the mean, which it did, and then some. Didn't all get down to purple, but it's definitely on the defensive right here until it can close back above, I think, 360. Let's call it 355. Above 355, this thing goes on the bicycle, and if Bitcoin breaks above 110 grand, this thing's going to go, I would imagine, because this thing is loaded with Bitcoin. But you can see right now, it's still on the ledge. You got, a big traffic jam at 355 unresolved. It's trading 347. And so, it still has that potential to hit purple or gold. So purple will take you down to 250 and gold even worse. So again, this is a deal where you'd like to see it breaking out so that it doesn't break down on you. And it's really probably going to depend on Bitcoin breaking above 110, which we'll look at right now. Is it going to do it? Let's see. All right, there's your Bitcoin. I thought it was in a trading range, 100 to 110, went down to 95 during the scare. That's another support level. Let's look at the 1 month. Yeah, you see, that's the scare down to 90, come back up. If you look at the longer term graphs, see 90 is a big area of support. If it breaks 90, then you're going to go down and fill the gap. And that means maybe going down to 65, 75. If you break 90, they tried to break it, couldn't do it. Right now it's at 102. So if this thing breaks 110, MicroStrategy will probably take off. If it breaks 95 and 90 and does a correction, MicroStrategy is probably going in the soup. So keep an eye on those two things. It'll give you an idea of what's going on. What else is happening here? Well, this is a pretty popular company, DoorDash. Bring your food to you. That's not DoorDash. Dash, D-A-S-H, boom. DoorDash. It's been a steady riser, I think. Maybe it's had a correction. I haven't watched it. But these are all taken off the top performers so far in 2025. So they're off to a start in some way, shape, or form as of last Friday. And they're up now. Yeah. So, this thing obviously is in an uptrend. It came back. See, when it reverts to the line, that's when you want to try to take your action if you're going to take a shot. So you had a shot to take it here against red. Now it's already up again. We'll have to see if it's going to accelerate up. What's the 1 year look like? Yeah. So it's extended. Certainly not the most outstanding entry of all time. That's for sure. Anything else that we could shout out here? Well, this is a couple of good ones that look pretty interesting. What about Zscaler with regards to the cybersecurity? And they got earnings, I think, coming out later this month or next. So is there a setup here worth looking at? Let's take a look. First of all, let's look at a longer term graph if there is one. I don't think they've been around that long. Well, that's pretty constructive stuff. All the moving averages are underneath the price. It's above the price. RSI is above 50. It's not the worst setup I've ever seen. And if these guys had good earnings, they can pop. Because I can tell you that because they were down here against purple when we had it on our report. We thought around purple here was a good place to take a shot. And then after earnings, it popped up. So they do pop sometimes after earnings, no doubt. So keep an eye on Zscaler. There could be something there. Lamb Research, LRCX. Now this one's interesting because it's in a traffic jam, right? And the traffic jam is about what do we got there? 75 or so. Let's call it 70 to 80, pretty much 70, 82. It's not going to last forever in there. So this would be something. The purple line's rising, so obviously the bet would be that it would break above blue, as long as that purple's been holding. So there could be an opportunity here on Lamb. I'm not sure where their earnings are coming out. I'd check on it if I was interested. And then I would say maybe this thing is going to get good earnings and break out. So keep an eye on it because that can move. As you can see, it can move and it has been consolidating. So somebody's been waiting for something, probably earnings or tariffs or something. And then we'll have to see or whether DeepSeek had the answer or not. So, yeah, there you go on Lamb Research. Any other ones that come out that look too pretty cheap here? Dexcom, DXCM. These all had a good start to the year. Maybe a body in motion will stay in motion. Maybe it's a up and down deal. Well, only time will tell. Dexcom is coming out of the basement here a little bit. That's good. Blue line pointing straight down, not good. That's on a 5-year basis. Reversion rally potential up to 110. And what does the 1 year look like? Yeah, 1 year is constructive. We said it might go up towards 110 on a rally. Looks like it'll have trouble getting through 100. But is there enough there to get a pop? I don't know. It's like I say, not the most exciting stock, but it certainly has somewhat of an upside bias with a ceiling not that far away. Okay. We got Meta there, Intuitive. Let's look at two more, Micron and Marvell. MU. It seemed like anything around 100 or 95 on Micron was a good deal. Let's see what it looks like now. It's up in the aftermarket. Yeah, like I say, it's back and forth, driving people crazy. Let's see. Obviously, you'd want it to get back above 100 and 110, and then you could say, hey, this thing might be going someplace. So, this one would be better to buy at 100 or 110 on its way to 120 than maybe buying it here because it has a lot of resistance above. What's it look like on the 5-year graph? Yeah, you see it's holding purple. That's all good stuff, but it's got overhead resistance. So if it busts purple and gold, then the party's totally over here. If it doesn't and it gets through blue, right in that same neighborhood we were talking, 100, 110, look at all that white area. So I definitely keep this on my radar because they are a very, very big player in the storage area. So they're no joke. And the last one up here is going to be Marvell, MRVL. Sometimes it's better to buy something higher than where it is now because when it does that, if you have momentum, you'll get a follow through. Sometimes. Okay, Marvell. Huh. Yeah, well, it's already had a big run, so yeah, that's running right into resistance. Could get right through it though. Gets through there, it'd be a good sign. So where are you there? About 115 where it's trading right now. So that would be a place. If it got above there, then you'd obviously cut and run if it broke under there. So it's a pretty good get in, get out if it doesn't work out type thing. I don't mind those at all. Um, okay, let's look at the NVIDIA because I'm going to show you something that is off my work, and my work looks pretty good right now. We'll see. Let's go. NVDA. You see it hit the gold? That's why I said if this thing's going to stop, it's 115. That's where you take your shot. Today, 115, 113. Why? Because you got it on gold. If it breaks underneath it, you ditch it. So it's a catch and release, right? The old catch and release. So that's where I got the number from. So now you know the secret's out. Right there, baby. Right there. And again, the problem is these options are very expensive. So you're almost forced to do bull call spreads on them because the premiums are pretty big, you know? So that's what I would be looking at. And if you're a credit put spread kind of guy, obviously doing it against a support zone when the premiums are high is something to entertain. So this is how I would kind of help people when they are doing different types of strategies and maybe they're not that savvy on the timing of some of these things, you know? So that would be helpful to some. Okay, so we got earnings coming out. I'm going to start hitting some of these and see if anything's going on. Okay. We've got Google coming out tomorrow. Come on, Goog. Goog's been a very good stock because it is reasonably priced and they've got a moat around their business. And every time they talk about breaking them up, they never happens. And they're not even China. Imagine if Trump did a deal where Goog had to go into China. This thing would freaking explode. Anyway, you can see right against the blue line has been the way I've been looking at it. Every time it hits the blue line, a great place. Right now, the only thing that's concerning is I got my RSI up here at 69, and then I got it at 61, and over here I'm at 59. So you have a decreasing relative strength. That's not good. So if this thing gets anything concerning, it could go into the dumper pretty good. But the way these charts look right now, again, the most likely thing is a bust to the upside. And it's up almost $2 in the aftermarket. 5-year graphs gives you another idea. Again, though, a little bit, you're up 68. Where are you here? Where are you over here? 68. Yeah, not a big divergence, but it definitely is weakening a little bit on the relative strength side, particularly on the 1 year. If I'm looking at the 1 month, get a shorter parameter. Yeah, you don't want this thing underneath $200. And you definitely don't want it underneath 197. So there's your parameters. You don't want it under 200. You don't want it under 197. The red line's pointing straight up. So getting above the red line would be lovely. That comes in at 204, which is kind of where we're trading right now. So we'll have to see. Merck tomorrow. Drug company, healthcare. I think it's a little bit down and out in Beverly Hills. Let's see what it looks like. It was down and out in Beverly Hills. I think it had a pop. Yeah. See, down here, we thought it was good. I put it on the list because I thought strangling it down here made a lot of sense. And obviously, it ran all the way up. So right now, it's a tough bracket because you're right into the resistance. So if this thing had good earnings tomorrow, you could see how it could pop and fill that gap. If it misses, these two lines will hold this thing back. And if it blows out red, with everything else pointing down, green pointing down, this thing could go easily back down to gold. So this is going to be a pretty exciting market, I would imagine, after the earnings. Oh, that's Marvell. Sorry. Too bad they don't have earnings coming out tomorrow. They look like they're ready to go out of that range pretty fast. Yeah, this is more like it. It didn't have much of a pop. I think the low was 90. Well, it did a little bit. See, it comes down here. It's turned up. It's turned up, right, on the monthly, having trouble right here. So obviously you want this thing to maintain $89. Excuse me, $99. And it's doing it, right? So on the 1 year graph, if it can get going, there's your resistance up here. So it could pop very nicely to 106 on good earnings, but then it could stall. So keep an eye on it. Might be a trade for a pop. And see that. What else do you have here? Chipotle. Uh, Now, this company obviously still got a lot going for it. But you have to always wonder if they have menu fatigue. But let's see what it looks like going into earnings. Yeah, you see, it's right here in the neighborhood. So it's either going to be able to blow out the blue and get going up here, or if it comes out and gets anybody nervous and starts getting underneath here, it's got a long way to go down. This obviously would be interesting to me to price out a strangle on because it's probably going to be a feast or famine deal after the earnings come out. And they come out tomorrow. So we'll have to see. But you can see from the way it's set up, it could break up or down with a slight bias to the upside. On Wednesday, we already went on over ARM. Uber's coming out. Everybody loves Uber because, they got a lot of things going on. They're a tech company. I use one today, so I guess I'm helping their earnings. I don't think it'll count, though. It's after the thing. But here you go. You get above the purple line here in gold, you're going to fly. So that'd be where I'd be looking at it. And it looks like it's turned up. So that's a good sign. RSI is looking like it's turned up. So can you get above 70, 71? Because if you can, you got gap here, you got gap there. A lot of potential in Uber if it gets on the bicycle. Keep an eye on it. Already went over Qualcomm. Disney, we caught Disney about a month ago when it was down in the 90s, and it went on a nice run after their earnings last time. We were very thankful for that. Let's see what it looks like now. Yeah, you see it had the big run up after the earnings. That was, you see why we liked it? See how it's consolidating here? The options are pretty cheap. You get above the gold line, it's going to fly. So that was a good deal. Then it pulls back, holds the gold back above red. Now you got a traffic jam right here, and the traffic jam's between 110 and 111. So obviously it's at 114. Now you know where you don't want it to go underneath. And if it gets good earnings, it could pop up and really get going again. Because on a long-term basis, I think the stock looks like a pretty good deal. Look, it's just waiting to break through there. So that's why I say you can get above that 115 area and it could follow through pretty good. So keep an eye on Disney. Could be exciting. A lot of people have a lot of money, so they're going around spending it. Amazon's coming up and Lilly on Thursday. Let's take a look at those guys real quick. Eli Lilly. Of course, it really doesn't make much sense because it costs so much. Who's going to play it? I like options that cost $2 and $3, not $17. Okay, what do you got here, old Eli Lilly? Big move up, then a big move down. And now, like I say, it's trying to hold ground at the red line area. That's on the 20-year. What's it look like on the 5? Yeah, it's not looking so great on the 5 unless it gets back above blue. And it's got some resistance above with a gap there. So, it wouldn't be my cup of tea. I'm not messing around with $800 stocks. So I don't think many of you guys are either. So let's get off of it, huh, Jim? How about Bristol Myers Squibb? Another druggie. Now, we had this on the list and it had a nice pop. I haven't seen what it has done lately, but it has earnings coming out Thursday. And I think 55 and 60 is the one we were looking at. You see 55 and 60 has a strangle in there. So we're looking for either a bust out through 60 and get going, which is the way it's pointing, or get a disappointment and maybe go down here towards this number down here. But what we're not looking for it to do is stay the same after the earnings come out Thursday. All right, I wanted to show you something that I do when I look at the markets. I try to keep my head clear no matter if it's going up 100 S&P points or down 100 S&P points because I'm more interested in what the price is versus my levels. Okay? And that has been very helpful to me. So, back when we were here on January 13th, it was obviously hitting my purple line. Do you notice purple is a inordinate price to get hit? I mean, there's a year there. You only got like 3 hits on it, right? So when it goes down there, it's a stretch point. Now, if it really busts down like it did in August 5th when Japan was doing the unwind trade, it could almost go down to gold, right? But that's very rare. So anytime it's on purple, it's worth a sniff. So on January 13th, we also knew a full moon was happening there. People act on a full moon, crazy. And we got a big, big run up. Now, when this run up happens like this, I look at the RSI over here up in the 60, 70 area, and I see it's only at 60. So I'm thinking this is short covering and FOMO, and that doesn't last sometimes. So I thought it would pull back. Now, today, it pulled back right to the purple line. So while the world was coming to an end, which it didn't do, again, Trump doesn't want this thing tanking. He doesn't want this thing tanking. In fact, he was in the office going, Somebody said, "How's the market going?" Oh, I haven't seen it yet. He's got Besant behind him, who's a hedge fund manager, and he's got Lupkick, Howard Lupkick, who used to run Cantor Fitzgerald behind him. He doesn't know what the stock market's doing? Come on. So anyway, he saw the thing tanking, and all of a sudden he goes from 25% tariff to send 10,000 Mexicans to the border. They needed to put tariffs on to get 10,000 Mexicans to the border. And up in Canada, uh, they struck some kind of a deal up there. Canada, I never understood anyway. They only have less than 1% of the fentanyl coming through there. I mean, that doesn't sound like use the Emergency Act for that. And, so that's what happens. He called them all. He's probably not going to call up China because, China can afford it. And so basically, that was a good place to buy. And tonight it's up, as you can see, it's up 28 points. And so you got a nice little pop today off of that thing. Where did I come from? I came up from it here. So that's how you kind of keep cooler heads and prevail. You know what I mean? And let me go over a couple other markets. Some of you guys are into the gold. Let's see what the gold is doing in the cash market on the February contract. I've been very good on this one, I think, too, because I follow the markets. There's no magic to the numbers. It's how you interpret them. And I feel like I do a reasonable good job in interpreting them. Because anybody can know what a moving average is. They might not know or can't, figure out and make a decision on there or something like that. Anyway, the gold clearly, like I say, against purple, you buy the heck out of it, right? Now up here, you just enjoy yourself. Why? Because it could have a nice big pullback if the dollar stays strong and things calm down. Conversely, with a $2 trillion deficit and no end in sight, and also you've got tax cuts coming, the deficit could take off on you. And the money supply growth bottomed in April of 2023 at minus 4.8%, and it's been rising to a point now where it's above the inflation rate. So obviously they're expanding the money supply, they're expanding the deficit. They have no interest in a recession. They have no interest in higher interest rates. So the bottom line is that gold could have a fantastic year this year if, in fact, they continue to run up big deficits and keep printing money. So there you go. That's gold. Right now, obviously, the story on gold is stay above 2720 and 2650 and 2600. Stay above all those numbers. All right, you're looking at the crude. Crude still has backwardation, which means what? The front month is trading higher than the back, which means there's tight supply. Now, drill, baby, drill sounds great, but you know what? If the prices are low, who's going to drill and lose money? So it might not work out that way. Then you slap a tariff on somebody and you could have real problems. You see, this is where you're supposed to take your shot on the pullback. Right there, bam. As long as it stays above that number, I would be constructive. Gets underneath that number, you're going back in the soup. If you ever get above 82, you might see $100 crude. So how's that? Stay above that one number for your support, get above 82, and then basically you could be into something pretty big. Because look, purple's been holding for years. Years. Okay, so that's the story on crude. All right, we are into 45 minutes on this deal, and I am, well, let me just show you a couple more things, then I'll tell you what I'm asking you to do. Okay, the US dollar index. Okay, up at 108. You see the high's been 115, right? Came back down. This is called reversion to the mean, which I talked about. Went a little bit lower, but if you look at the 5-year graph, it came right into my gold, right? Into my gold. That's why I use different time frames. I wouldn't have known that if I didn't bounce around. And now it's on the bicycle. Does it look like it could go back and test the high? It looks like it could do that. And right there, it looks like it already went up to test that high. And there's your traffic jam where you should have been taking the long side right there. So we'll have to see, but the dollar looks pretty strong. It's obviously a little extended right this second, but most of the support is underneath. I thought a pullback to 107 or 104 could happen. and it did pull back to the 107, but it never pulled back to the 104. So there's your dollar. Yeah, the other thing is you better take a look at interest rates. Again, high deficits, printing money, you know, it could be a problem. So here I look at the 20-year line because that's the long-term trend, and you'll see when everybody was getting very thinking rates are going to drop when in September, I said no way, this thing's going to hold 360 and rates are going up, and that was a very good assessment. Now it's hard to say. It could pull back to the blue line and the green lines very easily, or it could take out 5% and get moving. Hard to say. I would say there's no evidence of a massive decline in interest rates right now, unless you broke under 4%. And we're at 454. So those are your numbers. Above 5, you're going out, probably about 480. Under 420, 4%, you might get your lower interest rates that everybody likes. One way you get lower interest rates if unemployment spikes up this year for some reason because they're firing everybody, and or the economy slows because once people hear the word unemployment is rising, they may get a little suaver about their spending. Last thing, VIX. You got to follow the VIX. VIX between 13 and 16 is everyone will buy stocks morning, noon, and night. VIX gets above 20, nobody wants to buy stocks. And that's what creates the big buyer's boycott, and that's what creates the big drop. Now, this thing is still above 18. If you really want to be comfortable with the stock market, you need to get it back under 16. If it goes over 20, that means we're going back in the soup. That's my view. All right, so here's what I'd like to ask you to do. I think David is going to put up a link that you can click on, and here's basically what I got for you. People dealing in options right now, they basically need three things. One, they need is education. Two, they need maybe some ideas. And three, they need some coaching, meaning somebody who's traded a lot who can maybe go through some of their challenges and maybe help them with their challenges so they can avoid mistakes that otherwise they would not avoid. Or maybe just give them some ideas on how to trade different things. How do you do the spread? How do you get out of the spread? How do you leg into this? How do you leg out of it? What do you do with rolling them? At what point do you roll them? How much should an option be at if you're going to really try to sell it? I've got my own opinions on that based on decades of trading. So I could be helpful maybe. So here's what you get. You get a options masterclass, which is 3 sessions, 6 hours of material, very comprehensive. It's an online deal. You get it in a link. You can call me up and ask me questions if you have questions on the course. Whether you're just starting out or experienced, I'll help you. Second thing you get is a weekly update sent into your email Sunday night, which goes over a market commentary. So I give you an idea of what I think the markets are doing and all the different ones. As you can see, I follow them all. I didn't even get into the global markets. And I give you my overview on all that stuff. And then I give you some ideas on strangles and long-term options, and then levels on the indexes that I think are important. So it's really a research report with some ideas in it. And it includes some coaching. So if you have questions on something, you can always talk to me directly. So that's the package. The package is education with the class, the ideas and commentary on what the markets are doing. And finally, you've got the coaching where me and you talk and you go, Jim, I'm doing this kind of trading. I'm doing these credit spreads. I'm doing these DTE trades. Is there anything you would do that I'm not doing that might help me? And I give you my opinion. So it's very helpful, I think. And so there's a link that David's putting up that you can click and you can get started. The total cost to get started is $297, which, I mean, the coaching goes for $200. I'm giving that an hour of that for free. Then you get the class, which goes for $397 on a standalone purchase. So that's $597 of free stuff. And you get in 3 months of commentary and ideas, and the ability to give a call if you have a quick question. Okay. So that's a pretty good deal, I think. And so please try to take advantage of that. And those who sign up now will also get a copy of what I consider to be the 5 best ways of entering and exiting options. I wrote a paper on it, and that could come in handy to some of you as well. So that's a bonus if you get started tonight. And then, like I say, once you sign up, I'll have your information, or you could text me, not text me, but well, you can text me, but email me and say, hey, Jim, I signed up. I'd like to have a session with you. Let's get it going. And so my email is optionprofessor@gmail.com, OPTION, professor@gmail.com. And yeah, like I say, I think it's more than fair. I think after 90 days, you'll have a darn good idea if this thing could be of long-term use to you, and I think it will. But you'll certainly be getting more than your share for your 297, in my view. And again, when people are a customer, I always consider them a friend. If a friend calls up with a question, you try to help them, right? So hopefully you guys will take advantage of that. I don't think you're going to miss 297 this year, but you might miss a lot of the stuff we talk about. So yeah, have a great night here. We got a big day tomorrow, big earnings the next 3 days. So market is trying to turn up again. So if it can do that, we could get some pretty good upside. We certainly know where the parameters are. You do not want the future underneath 59.27 if you want to be bullish, because that should have been a short-term low today. All right, guys, thanks for being here. Again, this is Jim, the Option Professor, and I'll be available if you have any questions through the email, and just give me your contact information, and I'll check back with you. David, are you all set there? I'm going to turn it back over to you. Okay, he's all set. Thanks a lot, you guys, and we'll